Welcome to this explainer. Okay, quick question. When you hear the words finance and accounting, what immediately pops into your head? A dusty ledger? Maybe a windowless room just packed with calculators? Well, it is time to completely throw that picture out the window. Today we're looking at finance and accounting not as some passive historical record keeper, but as the dynamic operational engine of modern business. We're going to unpack exactly how this massive transformation happens and how technology is literally rewriting the rules of the game.
So, here's our cognitive roadmap for today. We'll start with the backbone of business, dive into accounting versus finance, and cover the essential financial statements. Then, we'll map out end-to-end processes, explore the automation revolution, and finally, we'll ground the whole shebang in a real-world case study. Let's get into it.
Kicking things off with Section 1, the backbone of business. We're talking about the big transition from the back office to strategic partner.
Ultimately, the entire purpose of this department boils down to a few absolutely crucial things: allocating resources efficiently, managing risk, and keeping the company structurally sound. Now, sure, the absolute fundamentals like bookkeeping, budgeting, and compliance, those are always going to be there. But the engine is shifting gears. Thanks to AI, cloud platforms, and real-time data, these teams aren't just sitting around crunching numbers anymore. They are actively driving enterprise value.
Moving right along to Section 2, Accounting versus Finance, where we define the anatomy of the department.
Now, people use these terms interchangeably all the time, right? But they actually serve highly specialized, very distinct purposes. Accounting is always asking what happened in the past. It manages the general ledger and makes sure you have totally accurate historical records that comply with strict standards like GAAP or IFRS. Finance, on the other hand, asks what will happen in the future. It is laser-focused on forecasting, scenario analysis, and long-term value creation. So, basically, one is your rearview mirror and the other is your headlights.
But what's really fascinating is that despite that huge temporal difference, past versus future, they share a critical, overlapping, beating heart: financial statements. The verified historical data that accounting puts together, that feeds directly into the future projections and strategic modeling that finance does. They completely rely on each other.
And that leads us perfectly into Section 3, Essential Financial Statements. Think of this as the ultimate scorecard.
If your business is an engine, these statements are the dashboard dials. They tell you exactly where a company's money came from, where it went, and exactly where it's sitting right now. The three main pillars you need to know are the balance sheet, the income statement, and the cash flow statement.
Let's map out what each one actually tracks. Your income statement measures profitability and cost efficiency over a specific period of time. Next, your balance sheet gives you a health snapshot at a single point in time, showing your overall capital structure. And then, the cash flow statement tracks actual real-world liquidity. And I really want to emphasize this: knowing your actual cash position is just as critical as your profitability. Because honestly, you can be wildly profitable on paper, but if you run out of cash, game over.
Let's switch gears a bit for Section 4, end-to-end finance processes. Now we're looking at the actual movement of money.
We are pivoting here from the static what of financial statements to the dynamic how, the actual gears turning inside the engine. The CFO's back office KPIs are all deeply interconnected, and when you start treating these as holistic, continuous, end-to-end cycles, rather than just isolated little tasks, you unlock a level of operational efficiency that is just off the charts.
Let's break down some acronyms. First up, P2P, or Procure to Pay. This covers the whole journey from picking a vendor to processing their invoice and making the payment, super key for managing working capital. Then there's O to C, Order to Cash. That's from receiving a customer's order all the way to actually collecting the cash. It's absolutely vital for keeping your revenue flowing and improving your days sales outstanding, or DSO. Finally, R to R, Record to Report. This is where you gather data, do journal entries, and prepare those essential financial statements for compliance.
A massive high-stakes part of that record-to-report workflow is the month-end close process. Closing the books every single month requires immense precision. It's basically a 5-step dance. First, you collect all the financial info. 2, you verify and reconcile that with bank statements. 3, assess fixed assets. 4, you generate the financial statements using that newly verified data. And 5, you conduct a final, rigorous review.
Which brings us to the conflict of our story in Section 5, the automation revolution, or as I like to call it, slaying inefficiency.
Imagine the feeling of being totally overwhelmed by outdated methods.
You've got manual, error-prone processes. You're dealing with severely delayed financial closes. You have blind spots in your cash flow visibility, weak spend controls leading to expense leakage, and poor receivables collections that just drag out your DSO forever. Add intense compliance pressure on top of that, and these repetitive tasks are practically a trap, keeping finance stuck as a mere back-office function.
So we have a real battle on our hands. And make no mistake, this is a battle for enterprise value. Fighting back against these manual, messy processes requires a modern technological triumph. We need tools that can finally cut through all that noise and friction.
And here comes the cavalry. Process automation, or RPA, steps in to slash manual errors and cycle times. Real-time reporting utilizes centralized platforms for instant, dynamic dashboards. We're talking treasury tools integrating right into your ERP, spend analytics uncovering hidden savings, digital dunning tools automating collections, and audit-ready rule engines keeping you compliant. This is the exact toolkit that finally empowers a CFO to make fast, strategic decisions.
Now let's look at what this means in the real world with Section 6, a case study of a regional retailer.
20,000. That is the massive, staggering volume of manual, messy invoices that this large regional retailer receives every single month. They pour in from suppliers and service providers in wildly varied formats: PDFs, random scans, messy Excel files, often with inconsistent layouts or just totally missing fields.
And the stakes here are incredibly high. Their accounts payable team is just completely bogged down by manual data entry that eats up hours every single day. The error rates are triggering duplicate entries and severe payment delays, leading to angry vendors. The CFO desperately needs to accelerate processing and get a grip on cash flow management. But, and here's the kicker, they have to do it without ripping out their entire massive ERP system. So how do you rescue an AP department in that kind of trouble? You walk them through a systematic 3-step transformation. Step 1, problem analysis. Dig into the root causes of those supply chain pain points and calculate the real risks. Step 2, requirements. You translate those pain points into exactly what business requirements and data insights are needed to fix forecasting. Step 3, the solution. You roll out data-driven, automation-based tools like smart workflows and AI-driven operations to totally bypass the manual bottlenecks without upending the core ERP.
And honestly, that brings us right to the core thesis of our explainer today. Finance teams are evolving from traditional back-office roles to strategic business partners driving enterprise value. When you automate the mundane, repetitive stuff, you elevate the human element. You free up your team to focus on strategy, on growth, and on forecasting the future. That is the true transformation arc.
So I'll leave you with this final provocative question to ask yourself about your own operations. Is your finance team stuck in the back office, just buried under manual data entry and historical ledgers? Or are they armed with real-time data and automation, actively driving enterprise value for the future? Thank you so much for joining me for this explainer. I really hope this sparks some powerful ideas for you and your organization.